Greetings and welcome to the lesson. The subject is advanced taxation. We've been studying the various aspects of the chapter professional practice in taxation. Today we progress to the next subtopic, which is disclosures in tax returns, computations, and correspondence with revenue authority. We'll begin with disclosures in tax returns and computations. Disclosures in tax returns and computation. We begin with these first two aspects: disclosures in tax returns and computations. Now, candidates in professional practice, in professional tax practice, disclosures and computations, these are disclosures in tax returns and computations. These two aspects are very crucial in transparency, accuracy, and compliance. And these two aspects intersect, that is, disclosures in tax returns and computations. In our today's lesson, we're going to explain how the two aspects intersect. All right. The first point, as far as disclosures in tax returns and computation is concerned, is that of accuracy. When in professional practice in taxation, the tax professionals must ensure accurate computations. All right? There ought to be accurate computations in tax returns. Do you understand? Disclosures in tax returns. What is being disclosed must be accurate. Accurate computations supporting disclosures. Accurate computations must support disclosures in tax returns. Accurate disclosures in tax returns must be accurately computed. Must be accurately computed. Tax computations, in other words, form the foundation of tax returns. They involve the precise calculation of income, deductions, calculation of credits, and taxation owed or refunded. So, in other words, these computations are essential for providing accurate disclosures in tax returns. Number two, disclosure of income and deductions. Disclosure of income and deductions. Tax returns require the disclosure of various types of income, such as wages, such as dividends, such as interest, such as capital gains, such as dividends, such as rental income, and so on. Additionally, deductions, credits, and exemptions need to be disclosed when computing taxable income accurately. So we have disclosure of income and deductions. 3, compliance with tax laws and regulations. Compliance with tax laws and regulations. Disclosures in tax returns should comply with the relevant or the current tax laws and regulations, and therefore accurate computations are necessary to ensure that all required disclosures are made and all relevant income and deductions are accounted for accurately and correctly. The fourth point is disclosures of uncertain positions. Disclosures of uncertain positions or disclosures of complex transactions or complex transactions. What does that mean? Now, in cases where interpretations of the interpretation of tax laws are uncertain or where complex transactions exist, it's essential to disclose such positions in tax returns. And therefore, accurate computations and clear disclosures regarding such uncertain and complex transactions demonstrate transparency and also mitigate potential issues with the tax authorities. So as a tax professional, when dealing with complex transactions, when dealing with the uncertain positions, it's important to disclose such complex transactions because that would indicate transparency and it can reduce or mitigate any potential penalties from the revenue authorities. Disclosures of uncertain positions or complex transactions. Number 5, supporting documentation for disclosures and computations. Supporting documentation for disclosures. Accurate computations candidates should be supported by thorough documentation, and such thorough documentation include records, include receipts, invoices, financial statements, and any supporting documents that validate the figures disclosed in tax returns. Supporting documentation for disclosures and computations. Then 6, we have ethical considerations. For disclosures and computations. Ethical considerations for disclosures and computations. Ethical practice involves ensuring that all required disclosures are made, and they are not just made, but are made faithfully, they are made truthfully, and they are made accurately. So tax professionals need to exercise what we call professional judgment in order to balance the client's interests with the responsibility to adhere to ethical standards and legal requirements. Ethical considerations for disclosures and computations. 7, we have transparency in disclosures and computations. There's also the question of transparency in disclosures and transparency in computations. Transparent disclosures and computations are vital for maintaining credibility. And this is credibility with the tax authorities. And that includes disclosing all the relevant information and explanations that support the position taken in the tax returns. Transparency in disclosures and computations. computations. Number 8, client communication. Regarding disclosures and computations. Client communication regarding disclosures and computations. Tax professionals should effectively communicate. They should effectively communicate with their clients regarding the disclosures made and computations performed in the tax returns. And such communication helps ensure that clients understand their tax positions and the rationale behind the tax positions. So these are 5 key points when dealing with disclosures in tax returns and computations. 8 points. We can have maybe the 9th point, number 9, responsibility for accuracy. Responsibility for accuracy in disclosures and computations. Ultimately, candidates, tax professionals bear the responsibility for the accuracy of disclosures and computations in tax returns. And thorough review processes and adherence to best practices are crucial to minimize errors and omissions. So these are 9 areas. And just to summarize or conclude on this point, the professional practice in taxation necessitates meticulous attention to detail in both computations and disclosures. That is necessary in order to ensure compliance with tax laws, compliance with ethical standards, and accuracy in representing the client's tax position. Do you understand? Let's now move on to correspondence with the Revenue Authority. Correspondence with the Revenue Authority. Correspondence with the Revenue Authority. Now, correspondence with the Revenue Authority is a crucial part of professional practice in taxation. And there are key aspects when it comes to correspondence with the Revenue Authority. So when corresponding or communicating with the Revenue Authority, first and foremost, is important for the tax professional to ensure accuracy and completeness of information. Number 1, accuracy and completeness. Accuracy and completeness. All communication with the Revenue Authority should be accurate and complete, and that includes providing precise information about income, about deductions, about credits, and any other relevant financial data. Adherence to deadlines, number 2. Adherence to deadlines. Tax professionals need to comply with deadlines set by the Revenue Authority for filing tax returns. They also need to respond to inquiries or provide requested information, because missing deadlines can result in penalties or further scrutiny. Deadline, adherence to deadlines. 3, clarity and professionalism. Clarity and professionalism. When corresponding or communicating with the tax revenue authority, the written correspondence should not only just be clear, but it should be professional and free from jargon. There ought to be clear and concise explanation of tax positions or any discrepancies in filings, if there are any, because that can then help facilitate smoother communication with the tax authority. Clarity and professionalism. 4, documentation and record keeping. Documentation and record keeping. Maintaining comprehensive documentation of all correspondences and submissions to the revenue authority is essential, because documentation serves as evidence and support for the position taken in tax returns or in response to inquiries. 5, transparency and disclosure. Transparency and disclosure. Transparency is a key aspect when it comes to correspondence with the tax authorities. It is key when corresponding with the tax authority. Why? Because disclosing relevant information, even if it may not be favorable, demonstrates honesty and helps to avoid potential issues with the tax authority. Being transparent. Five or 6, we have what we call legal compliance and representation. Legal compliance and representation. Tax professionals must ensure that their communications comply with relevant tax laws and regulations. They may also represent their clients before the revenue authority, which involves advocating for their clients' interests while staying within legal boundaries. Legal compliance and representation. Adhering to laws and regulations and advocating, representing their clients. Then in relation to correspondence, there is what we call understanding and addressing queries. Understanding and addressing queries. Understanding and addressing queries. Revenue authorities may send inquiries or may send requests for clarification on tax returns or on financial matters, and therefore tax professionals need to thoroughly understand such queries and respond appropriately, providing necessary explanations or additional documentation. Conflict resolution, number 8. Conflict resolution. And related to conflict resolution, we have appeals and appeals. In case of disagreements or disputes with the revenue authority, tax professionals may need to engage in dispute resolution processes or appeals with the tax authority. They ought to be correspondence. And that requires deep understanding of the law and also the ability to present a strong case on behalf of their clients. Number 9, professional conduct and ethical standards. Professional conduct and ethical standards. All communication with the revenue authority should adhere to professional standards and ethical conduct. And that includes avoiding misrepresentations, avoiding dishonesty or attempts to mislead the authority. Then lastly, continual communication and updates, or continuous communication and updates. Continuous communication and updates. This means keeping clients informed about ongoing correspondence with the revenue authority is also crucial. There should be regular updates on inquiries, regular updates on audits, or any developments in tax matters to help maintain transparency and manage expectations. So these are 10 areas in relation to correspondence with revenue authority. And all in all, candidates, effective communication with the revenue authority is essential for tax professionals to ensure compliance, to resolve issues, to advocate for their clients' interests within the boundaries of the law and within professional ethics. That will mark the end of the lesson, disclosures in tax returns, computations and correspondence with the revenue authority. I'm going to read the revision questions, write the questions down. 1, where or what are the standards and best practices for disclosures in tax returns, computations, and related documents to ensure accuracy and compliance? I repeat, what are the standards and best practices for disclosures in tax returns, computations, and related documents to ensure accuracy and compliance? Number 2, how do tax professionals ensure accurate and compliant communication with tax authorities? What protocols are followed to address inquiries or audits effectively? Number 3, what types of documentation should accompany disclosures in tax filings? How do these documents support the accuracy and legitimacy of the disclosed information? Lastly, how do tax practitioners maintain confidentiality and privacy while disclosing information to tax authorities? What ethical considerations are crucial in these interactions? Thank you for attending the lesson. I hope to meet you in our next session as we continue sharing knowledge in relation to advanced auditing, in relation to advanced taxation. Our topic has been professional practice in taxation. Bye-bye.